Alright guys, GenZ here, and today we got episode 2 of our options journey. So pretty much I document my financial journey. If you're new to the channel, I'm GenZ. I'm a 22-year-old investor. And even though I'm 22 years old, I have a 6-figure portfolio, $144,000. And I do not want to work my blue-collar job for the next 40 years. I want financial freedom. I'm not saying I'm going to quit early in life, but I want the option to. That would be very liberating. Essentially, I've tried many ventures in my life. As soon as I turned 18, we went from just buying and selling stocks, cryptocurrency, whatnot, and all of that has failed. Right now, we are onto the options journey, the options venture. And so far, this has been my most successful venture, to be honest. In this video, I'm going to be showing you guys how I made $2,500 in options this week. And I mainly prioritize the wheel strategy and cash secured puts. That's what I'm doing right now. And that made me $2,500 this week. So looking at the portfolio, we've taken heavy losses from our other ventures like high yield dividend investing, but now on options we've been very profitable. We're at $144,000 in value right now. You see we got no open contracts. Everything has expired worthless or I closed them out, so we're gonna open more on Monday. We can go to our portfolio, or actually our spreadsheet, and this is where we can track everything. You can look at the date. So today's Friday the 2nd, Monday was the 28th. So we made all of these trades, and yes guys, it's all green because we haven't sold for a loss. And generally, if I had to ever roll anything, I would roll it for a profit. So you what's the term? I'm still fairly new to it. It's been 2 months, but I've only rolled once. I believe it's rolling it down and out. So yeah, if I had to roll, I would roll it down and out, and ideally you're gonna roll it for a credit, not a debit. But looking at how much we made, well, we can look at the 1 week. If you add in all my premiums this entire week, we got paid $2,679, guys. Again, this is crazy, guys. This is more than I made at my 9 to 5. Although this is a very good week, all right? If we were in a bear market, it would be totally different. I understand that. You know, you guys don't gotta tell me this is a bullish strategy, and if it's a bear market, you're going to be bag holding. I'm aware. But for the most part, the stock market is going to be bullish, and right now it is bullish, and we made $2,500 this week, so that's all that matters, right? But yeah, another thing I want to bring up, it's a psychology thing, guys, and I'm starting to learn it. You want to do a cash secured put every day, and if you get assigned, it feels bad mentally, psychologically, because if I'm doing QQQ, I'm forced to buy 100 shares of QQQ. That would be $47,000 I gotta spend, guys. But the thing is, in most instances, you make more money getting assigned than you did just selling the cash secured puts. Guys, look at this. So originally we got signed on these contracts right here, right? At the 483 and 481 strike price, we got paid $122 and $73 in premium. We get assigned, and literally the next day, which was today, 5 minutes into market open, we sold the shares for a profit. The market gapped up. We sold the 481 strike at $485. The 483 strike, you know, because it's closer to 485, you get less premium because the share price is closer, but still we got $284. So combined we made pretty, man, we can do it right here, equals sum. How much did we make simply from holding these shares overnight and selling 5 minutes into market open? We got paid $768, guys. Literally just holding stocks for overnight and 5 minutes into market open. And then immediately after these the collateral got released from these two positions, we opened 2 more cash secured puts, $100 premium, $40 premium. I was playing risky right here, so more, and then over here I was playing safer, so $40 in premium. But yeah, guys, I mean, you really do make more if it's a bullish market. You make more in assignment than you do just selling cash secured puts. And this is a psychological thing I'm learning, and I feel like if you're new to this also, you should drill that into your head that getting assigned is part of the wheel strategy, but you really do possibly make more money than you do getting assigned than you do just selling cash secured puts. So all right, one more thing, guys. So how did I make $2,500 this week? Or how do I pick my strike price? How did I make this a really good week? So essentially, the first thing is, what am I doing the wheel on? I'm doing 2 contracts of QQQ daily because QQQ, it has 0 days to expiration contracts. I love the wheel also because I can do this at my 9 to 5. When I'm at work, at my blue collar job, I can go and break for 5 minutes and put in the trades on my phone, go back to work. Boom, I just made $150 for the day. And so I don't need to do technical analysis or any of that. It's just simply my strategy that I've been doing. And some people are going to argue it's gambling, and I mean, you know, it's working for me, and that's all that matters. I'm just telling you guys how I do things. And to be honest, I feel like I do things in a very logical reason. But on top of QQQ, it's an index. If you look at QQQ, you want to do the wheel on something that you believe in long term, right? QQQ, it's an index, so it's not a stock. And also, this thing over the long term, it always goes up. It goes to the right and it goes up. That's all that matters. If you bought or did cash secured puts here and you got a sign, well, if you held it long enough, you would be up again. So that's all that matters, guys. And that's one thing. That's why I do QQQ. I do Robinhood too, just because I can't buy a third QQQ contract. So I do Robinhood because I feel like it's, I guess, undervalued. I feel like this can go to $100, if not more, in the future. So even if I get a sign on Robinhood now, I can just do covered calls and sell it for a profit in the future. So a big rule is do cash secured puts in the wheel on something you are willing to own for the long term. The coolest thing about doing the wheel strategy is the risk is in your hands, and this is a probability game. So what do I mean by risk? Obviously, you go to QQQ and we can find it. Trade options, selling a put, and you get 0 here because it's after the market, so we gotta say Monday, right? Assume this is a 0 days to expiration though, so this would be in the money right here at $488 strike. Some people have their own rules, right? Every trader is different. Some people say I only buy a 0.7 delta because I want the most premiums, wow, with the a decent chance of not getting a sign. Some people say I only do 85% chance of profit, so they would do this trade right here. I wouldn't do this trade because it's too low in premium. For each QQQ contract I do daily, my goal is to make $100 per day per contract, right? And obviously we made $2,600 this week, meaning we made over $200 per day because of this week, 5 days a week, right? So the goal is $1,000 a week. We made $2,600 this week. This beat expectations. But how do I pick the strike price? This is the most important thing. And essentially, I look at QQQ, and I don't do that stuff where they say 85% chance of profit, or they will say I only do a 15 to a 0.2 delta. I don't do any of that. Honestly, I don't even look at the delta. I'll quickly look at the premiums compared to the chance of profit, and generally I look at about 80% chance of profit. And then, but I don't immediately say, all right, we're going to do this one. No, I don't do that. I will look at QQQ on the daily, and let's say right now I only put in trades at about 10 o'clock, or I try to put in trades at 10 o'clock. I've done it before 10 o'clock and the market moves randomly up or down, and then you get screwed over. So you generally can see the direction of the market about after 10 o'clock, and that's why I say 10 o'clock. Let's say right now QQQ is up 1.4%. This is kind of green for the day, and it has more room to run down than it does to run up. So again, it's probability. It's not guaranteed, but it's probability. So it's more probable it's going to run down. So I'm going to choose a lower delta or a higher chance of profit. So instead of doing a 77% chance of profit, I might do a 84% chance of profit. Now, if we want to get really specific, what do we do on a red day? Let's say QQQ right now is negative 2% for the day, right? So the thing is, what's the probability it's going to go down another 1%? Not too high for QQQ. Generally, people will buy the dip, or if it's down 2% already, going down to minus 3% for the day, it's kind of oversold. Generally doesn't happen. It's not impossible, but it generally doesn't happen. Again, that's probability. So if we are minus 2% now and the share price is $488, let's round it to $489. I want to give it a 1%, I guess, room of error. All right. So let's say QQQ is $489. I'm going to go to a percentage change calculator. We're going to do 489. Let's just say, 485. Let's assume it goes down to $485. That's a 0.8% increase in the share price. I said 1%, so let's go down to 484. And if you can see right here, 1% decrease. So right now, QQQ is at $489 and it's down 2% on the day. Doing this method right here, this is what I do. This is literally what I do, guys. And alright, so it's probably not going to go down 1% to -3% for the day. So I'm going to make my strike at 484. And then I'll go over and then I'll do 484 and boom, I'll do that strike right there. That's essentially how I pick my strike price. And again, guys, don't complain. Everyone has their own method. And so far, as you can see, this is working for me. And, I didn't use a chart to figure out how to pick that strike price. And people are going to say you're stupid for not looking at the chart. But I'm still, in my own way, this is logical sense to me. We're looking at QQQ's price, whether it's up or down. If it's down, we're going to pick a riskier strike. If it's up too much, like if QQQ was up 3% right now, it's probably going to go down. So instead of doing something, I guess, riskier, like up here, we're going to do something down here where it's more safer. Yes, you're going to get less premium, but the chances of getting a sign is less because the strike price is farther away from the current share price. But yeah, guys, this is my method and not using a chart. I just like to look at the share price, look if it's up a lot or down a lot, and then I'll go to a percentage change calculator and I'll mess with the percentage and see what is the probability that it's either going to go up or go down. And for the last 2 months, it's been working out for me. We made a whole $2,500 this week from doing this strategy. And again, most of it came from getting a sign, guys, and just selling it the next day. But yeah, hopefully you guys liked the video. Hopefully you guys give me some feedback. Again, this is working for me, so hopefully not too many bashers say I'm doing something wrong or I'm going to lose my money like they always do. And if you made it this far, hopefully you guys check out my YouTube channel. It's right here. I'll put the link in the description. I post my stuff here first, and I learn everything from these guys. Every day we trade options together pretty much. We normally, all of us in the options channel pretty much do QQQ contracts every day together. So we all have our own perspectives. I'm the more riskier guy in our Discord. Some guys like to go 85% chance of profit, 0.15 delta. Some people are in between the super risky like I am, and then the less risky, less risk adverse. And so there's a good mix of us, and we just trade together. It's more fun trading with other people because you get to bounce ideas off of each other. So yeah, guys, link in the description. If you made it this far, then thanks for watching. And yeah, that's pretty much how I made $2,600 this week.